Hey there, I'm Roger Herring and I am the Investor's Accountant. Welcome to this segment of Ask Roger. Today the question is, what's going to happen to my taxes under Joe Biden? Well, now that we know that Mr. Biden will be the next president of the United States, everybody wants to know, are taxes going up? And he's already said it, his own words, yes, taxes will go up. But no matter who's in charge in DC, taxes have to go up, gang. Why? Because of all the money the government's put out because of COVID. Taxes have to go up or the tax base has to expand. The federal government needs revenue. That's the bottom line. So yes, we could talk about tax rates and we could talk about just who is exempt and who isn't. But today I want to focus on something. I want to focus on the inheritance tax because this has major repercussions for real estate investors and could be the largest tax increase in history on the real estate industry. So let's talk first about what happens now, and then we'll talk what will be proposed to happen under Mr. Biden. First, let's talk about the estate tax. Right now, the estate tax only applies if the estate is a higher value than 11.58 million. All right, most estates are going to be less than 11.58, so there is no estate tax. For the amount above 11.58 million, the tax rate is 40%. So if your if your estate is over 11.58, you have got to do some tax planning. Now, under Mr. Biden, he wants to raise the rate to 45% and drop the exemption to 3.5 million. That means we got a whole lot of tax planning because there's a whole lot more people that are going to be affected. But that's only one bite. There's this thing called the stepped up basis, which is wonderful for real estate investors under the current law. A stepped up basis means when we pass on property to our children, that they get to step up the basis to its fair market value the date of our death. So if I have a property I bought for $150,000 and I will it to my son and it's now worth $300,000, he gets a step up in the basis to $300,000. He can immediately sell the property. There is no capital gain. And hey, all that depreciation that I've taken, it goes away. So he could start depreciation over, he could sell it, he can do what he wants to, he doesn't get hurt. It's been a major tax planning tool for anyone with real assets. Under Mr. Biden, he wants to eliminate the stepped up basis. So, okay, Roger, that means that if we bought it for 100, the kids, when they inherit it, would just keep depreciating it, and then they could sell it later on down the road and they'd have a capital gain, right? Unfortunately, no. Because Mr. Biden also, on date of death, wants to tax the unrealized value on transfer. What that means is, if the property is valued at $300,000 and I have $150,000 worth of basis in it, the day I pass away, my kids have $150,000 capital gain. Well, Roger, what about the depreciation? We don't know. We don't know if that depreciation would be recaptured right then or wait until it was sold. He hasn't specified. Well, Roger, what about income caps? Again, we don't know. We don't know if this is going to be his $400,000 income cap that he seems to apply to everything else, or if this is going to be a standalone segment. At least we won't have to pay inheritance tax if we are paying the transfer tax. Unfortunately, no. In his plan, you're going to get taxed twice. You're going to get taxed on the value of the estate, and you're going to get taxed on the stepped-up basis of the property, even if it's unrecognized. So this is something that we're going to have to keep a great big eye on because it means a whole lot of changes to our tax planning and estate planning coming down the road. I want you to keep your eye on the news, see what's going on, and hey, if you got questions, shoot them to me. You can comment right here. You can send it to info@investorsaccounting.com. So you don't miss anything, go click on that button and subscribe to our feeds. Until the next time, Roger out.